So, welcome, Perennial Pride listeners. Thanks for joining me as always. So, this topic is one that I'm sure it comes up often. You hear about it as it relates to people's financial lives. It's about retirement. Now, whether you completely believe in retirement or not, there might be a case where you're at least transitioning from kind of your normal work or business life, and are maybe downshifting or transitioning. So this could be for either situation, if you're just retiring completely and no longer working, or just kind of moving on to a different path in life, which is great. And for a lot of what we're talking about related to this is probably most beneficial for business owners, but it really could be helpful for those who are running a successful attorney practice or medical practice. You are essentially business owners in a host of ways, and potentially hugely successful in what you're doing, but maybe have not sort of kept up with all the things around your retirement planning that is typically focused for a lot of folks on a W-2 worker, someone running a job. And so they have a lot of things geared to that are structured. But for business owners, things can change a bit. And for a lot of business owners, and this might be you, you're likely your biggest asset is probably sitting in the business you're operating, and what that could eventually land at in terms of a liquidity event down the road. But if that's potentially not the case, what do you do to build your sort of retirement sort of base and planning so that you can support the life you want to live well after you've kind of moved on and transitioned? And so this is a topic that is hopefully will be enlightening to kind of to give you a gauge of where you are with things, because just for like a lot of the financial advice we get and is placed for most people, there is a likely limit, especially as you're building and becoming more successful, that there are restrictions on what you can and cannot do, what you can contribute, et cetera, and things you can, and you need to sometimes look outside the normal sort of mainstream sort of system or design for other opportunities that may be valuable. And that's what this episode will be talking about, because we'll go into other broader retirement types of topics you might want to consider for your situation. And it's not meant to say that these are perfect for you or not. This is just to open up your eyes of what else is possible. And this is definitely not construed as financial advice for your situation. Everyone's situation is unique, but hopefully give you some lens of things to think about and ask questions of your current advisors or others to see if you're missing anything that you ought to consider as you're planning for your future and a potential retirement as you transition away. And really what we're trying to understand are all the pieces that you've built together around your financial life. Are they best positioned and coordinated in a way to support you, what you care about, and the life you truly want to lead now and in the future? So let's get going. A lot of people I come across, especially successful business owners, are doing wonderful things. They're having a thriving business, and as that grows, what ends up happening is then they start facing the concern of higher taxes and other things that get complicating their lives. And they may be doing some good things, and maybe maxing out their 401ks, which is typically what people are pushed to do, their IRAs, and maybe they have some basic self-employment, plan that they can contribute to and in their own right. And they're maxing that out based on the limits of what they're able to do in their based on their business success, et cetera. So they're capped out, and then they're wondering what else is there that they can explore. And that so this today's episode is really not going to cover a lot of the other advanced tax strategies you can play, but where I want to focus on is strictly around the concept of retirement planning. And for a lot of business owners, which some people have come across it and a lot of people have not, is things like cash balance plans or pension plans. And you may have heard of these before. And, for a big corporate America, which is typically where pensions started from, that really doesn't exist anymore. Maybe you have it in like education areas, right? If you're working for a government or state, that those pensions still exist that provide income later down the road, right? In your retirement. For business owners, there are options to create your own sort of defined benefit plan, like that, like a corporation or a government or state sort of group would do. But you can do that in the world of a business owner and a small business owner. And so that's the area that we're going to cover today in a little bit more depth to give you a flavor for what they are and what they could do for not again, it's not going to be super technical because there's a lot of ways to design them and they add some complexities, but they could be a valuable tool for you as you're thinking about and coordinating your future retirement plan and while you're running a very successful business. A lot of these problems potentially are rise because of people's tax bills are growing. And that's something that's a very acute thing you can easily spot. And it begs the question, or at least a concern of successful business owners. What do I do about that? How can I legally mitigate some of those taxes? And they're doing great things, maxing it out, like we talked about maybe a step plan or something as basic as that to some level, and they maybe could put 70, $80,000 into that. But if you're running a really successful business, you potentially have a lot more wealth that you could potentially be putting into your future retirement plan. And that's where these concepts of like a cash balance plan or a pension plan become viable for people like you. Because for those that are set up this way, you could potentially, depending on how old you are and it's factor into this equation, could be putting up 3, 4, 5 times that amount into the plans each year that are a deferral mechanism, just like a 401k plan or SEP plan, that you can defer the taxation on those dollars and reduce your taxes, your income this year for deferral and reduce your kind of current year taxes. So this is just an area to explore, and it could be designed very uniquely for hosts of reason, but for those that maybe haven't gotten as started with their retirement planning and want to put in a significant amount, like hundreds of thousands of dollars a year that can defer taxes, this could be a viable strategy. And there's a lot of unique ways that you could design them to also factor in things like planning for healthcare costs in the future, which we know is likely for most people growing older, the biggest expense you're going to likely face. And there's also unique ways that they can uh, create some structures in these plans where you can have buy other assets you couldn't buy in like a 401k plan, like life insurance. So there's unique structures that need to be factored in, and but you have to obviously look at everyone's situation and what else is going on in their lives, right? This in itself, if anyone considering or brought up the concept of cash balance plan, cannot be doing it in isolation. And this is the importance of figuring out where it fits into the other areas of what's happening in your life. And then most importantly, what matters to you, right? From a how you want your future life to look like, as well as things like legacy planning and such down the road, because these are all going to fit together. And so that's an area that is probably worth considering if there is a strong need or you have a lot of extra income that's creating all this tax liability. This is another way to put some deferral. Now, that's just a deferral. So just be mindful of that. And there are certain rules, which we'll go into a little bit of general concepts around it because it comes with other things for you to consider if it's right for you. But the reality is on the other end of it, as you go to use those assets, just like you would for an IRA or 401k, they will be taxed on the other end of it. And that requires separate sort of planning so that you can ensure that just because you got a sort of tax break at the front end, what does it look like on the tail end when you actually go to consume and use these dollars? How can you plan accordingly with other or parts of your plan that maybe give you a more tax efficient manner to go use and consume those assets? So just something to consider, to think through. Again, there are a lot of different ways to deploy that, but it's just something to consider because this is not a permanent deduction because you're going to eventually have to pay those taxes. You're just putting more into that kind of bucket. So as I alluded to before, one of the biggest myths around these sorts of pension type plans or cash balance plans that are only for big corporations to house, but the reality is for business owners, it's still a viable option. Yes, it comes with other parts to it. There's some advanced math that needs to be sort of accounted for with this because they're using this to create pension plans and this concept of actuarial science, right? They're doing some real planning here to make sure that it can produce the income for you down the road. But that's why you have teams to help you manage that, right? We won't go into it, but that's why there's a lot more involved with it versus just putting money into a 401k, putting it into some, index or something like that, and then maybe withdrawing it someday. This does require a little bit more complexity to it. And that's why you're going with experts in the area to help you build and design and maintain it along the way. Because a lot of these things were originally designed and meant for or created by large corporations managing them, but they obviously found it complicated and put themselves at risk at it. So that's why we had the 401k now, kind of got moved to that over time to put the risk now on the consumer, right? But in this situation, business owner can take the successes of their business and sort of take a deduction off of these contributions and build their own sort of pension plan within that they can own and control, and with the support and help of expert teams to help manage it properly and stay within the guides of the tax code, right? And this is just the idea conceptually, around these sorts of things is tax code in a simple form is one path, but then as you expand outside of that, there are other areas of the tax code that can be leveraged legally and thought through. Just sometimes adds more complexity and some management, and that's when you have to kind of determine if it's right for you in your situation. I've come across a lot of people with had hundreds of thousands of dollars that they were looking to deploy and didn't know where, and this was potentially a home for them to consider because they had not done a lot of the retirement planning that, some people in the normal job world would automatically be doing because that's the first thing they get with their HR. Here's your 401k, contribute, and I max out very quickly. Here you have a lot of expansion, a lot of areas of growth and what you can do to support your retirement in future years. It just requires being open-minded and being around the right types of experts to make sure you understand how the code works and how it can benefit you. One of the big things I really stress for you as you even consider going down this road and exploring it for your own self, if you're a business owner, is that this is where it's so important to sort of connect the dots with the other people on your advisor base, right? Whether it's CPAs or investment type folks, maybe even attorney, to sort of shape how this fits into your broader plan. Because obviously, for in simplistic terms, this is a large deferral, right, into an account that's for your benefit in the future that can create income down the road. But if your business is inconsistent in their income, right, then this may cause some challenges, or there's ways around it for sure to be more flexible and manageable. But the hope is that you have some consistent level of income that's coming in sizable that you can contribute to this plan because there's expectations that it's going to grow, but you need contributions to help make sure that it stays within the guidelines of what is acceptable from an IRS perspective. And that's why you have the team to help manage that. But if you have inconsistent revenue, there is some designs that can be done that give you flexibility, but it's certainly a better fit for folks who have more consistent income coming in, so you can sort of manage that along the way. But that's why, as you kind of move along, especially as you're going to use assets like this, that's why the coordinate team is helpful to have around taxation and in your investment world and your income planning, because you have other assets probably outside of this that are going to come to bear. And that's why there's a more formal world now of retirement income planning, because we have so many moving parts. We might build a lot of good things, but how do you control the use of those assets so you can enjoy the most of it after tax? So that's really ultimately what we want to know, right? Unfortunately, a lot of these types of accounts, when you pull them out, they will be taxed at whatever prevailing rates will be at the time, which we don't know. And so that requires some active planning in concert with other things, because and leading up to it too, of where can you build maybe tax-free assets, right, that are not going to be consumed, and how do you coordinate the use of them over time together so that ultimately at the end you have more to enjoy, give away, whatever your situation, and serve the purpose of whatever legacy you're trying to build in future generations, if that matters to you, and how those things are structured together. So again, I can't emphasize it enough, the importance of getting your team together and getting different perspectives on that together so that any piece of this, it fits into the bigger puzzle of what you're trying to achieve and support. And so that your plan is not a bunch of siloed pieces of structures or strategies, but a very cohesive plan that fits together and gives you the most maximum amount of wealth to enjoy and use, but also flexibility. Now, we've talked about a lot of being this applicable to business owners. And if you're listening to here and you're not one, you still might grow into one someday, right? Or have a side business. So it still might be relevant to you. But if you are a high income attorney or a physician, right? You have a business, right? And so you still might be eligible for things like this, certainly as your income starts growing. But for those who have side business, now more and more people are getting there, and maybe as part of your future retirement has something related to business in some respects. It's some area that you always wanted to get into yourself or challenge yourself. So those are areas that, this why this is still a relevant thought because you might build into it and maybe you start small somewhere and now you're growing as you maybe transition away from your full-time job. But some people are already really in the business, but it's probably maybe a hybrid at this point, but you might be eligible just given the structure of what you're doing. So it's definitely something to consider. And even if you are just a W 2 and that's where you want to play for the remainder of your life, which is absolutely nothing wrong with that. This is just giving you a lens to say, listen, in the world of something as basic as a retirement income plan or retirement account, there are a lot of different options within your world that you may not see or even know about just because it's sitting in the normal mainstream, right? It's the only thing that's available. And you may ask your CPA and they don't have any options for you, right? To consider just because they're just not aware and they're just so busy just trying to keep you safe with the compliance arm of your taxes, right? It's sometimes hard for them. They just don't have time. So that's why it's key to recognize there are definitely options outside as you expand your thinking and exposure to other options that might be valuable to you and getting the team around you to help you explore them and see if they're a good fit. So just be mindful of that because I come across a lot of W 2 employees with growing tax bills and are not offered all that much in terms of options. They're just told keep on deferring as much as you can and you max that out. And then you kind of just pay the extra taxes. Well, if that's a comfort to you, that's fine because I've run across that for a lot of people, right? And then it just requires you to step out of the system, I call it, and explore what else is possible because there are, and just requires a little bit more effort to go find it and be around the right types of people who can at least educate it on you for you, and then help you make a decision whether it's a good fit or not. So look, the concepts of defined benefit plans or cash balance plans, it may seem complicated, and in reality, it's just a kind of a expansion of something you're probably already aware of around what you already are doing. But for especially if you're high income earner, it opens up the door to think about what else is out there, and it requires you to go and ask the questions of yourself of your current structure. Is what I'm doing aligned to where I was or where I am today? And for a lot of folks who have built success and expanded their income levels and are now facing other problems, right, in their lives, this is a just give you hopefully a lens of what is potentially possible. And this is kind of just one piece of it to help you expand your thinking around what you could do with your wealth, how you can do to mitigate your taxes, and how do you expand the coordination of what you're doing financially to maximize all your wealth so that ultimately where this all boils down to that it best supports the life you want to leave today and in the future and even for generations to come if that matters to you. And that to me does require getting the opinions and thoughts and collaboration of people around you, the teams that can actually talk together, right, on your behalf to help you make better decisions. And unfortunately, oftentimes I don't see this happening, and for whatever reason, people are busy, et cetera. And, a lot of siloed sort of discussions happening. And it puts you as a business owner or high income earner in a difficult position to try to piece it all together. And I think it becomes very difficult. So I would urge you to go exploring, researching it, and certainly reach out if you want to chat with me and our team around it at Perennial Pride. More than happy to talk through it and hopefully expand your thinking and mind around these things because the more you do that, the more unique things come your way that you never knew existed. And I know I went through that myself. And it's an area that gets to be fun. And it also really helps you expand what is possible, which is probably what you've already done anyway as a successful business owner and taking that risk and sort of adventure to find out how you can make it be as successful as possible and impact you and the lives of others as well. So I hope this was helpful to give you a glimpse at it. Again, wasn't meant to be a full blown deep dive into what these are and what they could do. but just giving you a tip of the iceberg for you to go explore and ask more questions and explore for yourself. So thanks for joining me as always, and we'll see you on the next episode. Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.